Hi, Thomas. Nice to meet you first of all, and welcome to the podcast. It's a pleasure to have you here. How are you today?
Very good, and great to be here.
Thank you very much. Do you want to give us a quick introduction of yourself, your background, and of course, as always, a company?
No, sure, absolutely. So Tuomas Toivonen, co-founder, CEO of Holvi. I've been working on Holvi for quite a while. We started the company back in early 2010s. So we've been in business since 2011. Since that time, serving small business customers, freelancers. Started out in Finland 2011, and then expanded to European markets in 2014 when we got a pan-European license. So since then, we've been with a European focus, and what we do. So we help freelancers, small businesses, to run their businesses end to end. So customers get from us a core set of banking services. So they get a current account, they get cards, they get accounts in different currencies. They can trade internationally in 18 currencies. They get debit cards, they get credit cards, also payment acquiring. So you can also receive payments online as well directly through Holvi with one contract. And then on top of these payment services, we give our customers, the small business owners, the tools that they need to really run and manage their business. So we have the tools for receivables, payables, so you can invoice, you can sell directly with an integrated online store, a facility that Holvi has. You can manage your expenses through whether it's payable invoices, whether it is expense management through cards, whether it is expense claims. So really kind of the full set of receivables and payables. And of course, kind of coming from the Nordics where electronic invoicing has been a thing for quite a while. So we also have a full e-invoicing support, including also in the German market, where invoicing only this year has really started to be a thing when kind of the first e-invoicing mandates came to the German market. And finally, we also offer our customers a comprehensive cash flow dashboard. So where we bound the receivables and payables together so that as a business owner, you really know, as we all know, cash is king. So that you know how your business is doing, not only now, but in the near future, as we can also, of course, predict your cash flow in the weeks and months to come.
Oh, that's really interesting. Let me, before we come back to your background and to the market itself, let me spend a couple of minutes about the invoice topic. That is a very interesting point because, as you said, in the Nordic is right now mandatory. Is mandatory also in Germany since 2024, if I remember correctly. It's very curious that that kind of things is mandatory by law in Italy since 2018. And it's basically an European regulation that should basically be applied in all European countries, but every country is actually implemented it in a different way and with a different time frame. But I think it's very interesting, and it's one of those kind of features that we will see probably digital banking apps implementing very shortly all over the place. Basically, it's one of those kind of thing where regulation is actually boosting features on the fintech side.
No, absolutely. And if we look at our business and how we see the market, we're actually in many instances very pro regulation. We're very pro regulation on the European level. We're very pro of deeply harmonized regulation on the European level. I mean, often you have in European directives, less in regulations, which are of course the same everywhere, but in EU directives where quite a lot is left for individual countries to decide. And then we get like a lot of this market fragmentation where then every country implements things on their own time scale, implements their own standards for example, for e-invoicing, even though there is European norms for that. And of course, that can work on a kind of domestic basis. So if we look at kind of our whole market here in Finland, where e-invoicing has been really kind of a normal thing for like ever and ever, but it's been the normal thing with a domestic standard. It's the same, it's very normal thing in Sweden, but like with a domestic standard again, which is of course great for kind of businesses that really transact only in their home market. But the moment that you then need to start to transact across borders, even in Europe, and then the standards are much weaker. You don't have this like you have the single euro payment area that okay, euro payments, one standard scheme, one infrastructure. On e-invoicing, we really don't have that yet, that we would have kind of pan-European e-invoicing. Doesn't matter whether you're invoicing from Finland to Germany, Germany to Austria, France to Germany, that it would really cross borders. So here, and when we talk about the single market, yeah, it's not a single market for e-invoicing. We're quite far from that, and it's a shame, really.
And also for other, I would say also for other industry and for other verticals, we are still not that, unique market. But let me double down on this topic. So you're obviously based in Finland, you're expanding in Germany, so you can see the kind of differences that we have right now in terms of European Union between the Nordics, let's say the central part of the Union, and I can also, of course, add the point of view from the southern part of the union, of course. Do you actually see that kind of differences in terms of course, the financial services in this market?
No, absolutely. Kind of the level of digitalization, it really varies on a per market basis, and kind of thing that we often see coming from a smaller EU market, or what we kind of really see that smaller markets often kind of implement things in a more international fashion, kind of like looking at Europe as a whole as their market, whereas then we see much more fragmentation coming from big markets, whether it's Germany, France, Italy, Spain, whatnot, where the markets are so big in and of itself, where it's then easier to like, hey, okay, let's do a little bit of a different thing for Germany. Let's do a little bit different thing for France. Whereas kind of smaller markets don't have that luxury of let's diverge from common norms. So I wish that the bigger markets would take their cue from the smaller markets, and really kind of build towards a common market, rather than really adding their own gold plating. We have to do this in our own way. This is just not beneficial for anyone.
Yeah, I would say that it's also kind of a characteristic of, bigger markets under that point of view, It's kind of harder to regulate, but also to innovate and to produce a service in a market like Germany, where you have approximately 100 million customers, 100 million at least citizens, um, compared to, for example, Finland or Norway, when the amount of the population is lower. So it's kind of easier to do those kind of things. So I can also understand why there is this kind of a change and this kind of difference. But at the same time, you can see the kind of efficiencies that is present in certain market, and you always wonder, okay, why cannot we have the same in bigger countries and in bigger economies? So it's always a struggle under that point of view. But let's come back to your experience. So tell me about the launch of Holvi, the first phase under that point of view. How did you actually start it? Where did you find the idea, for example, and why did you decide to go in that direction?
No, sure, absolutely. And as I mentioned, we started back in early 20s when like kind of fintech was not really a thing. Our early investors were joking that, hey, we were supposed to do like fintech investments, but is this actually like technology from Finland that we're investing in, or financial technology? So it was super interesting times, but like also super early in like all things fintech. So there wasn't really kind of patterns or examples to follow, but really we had to kind of find our own way. But like, where did the idea come from? Why did we start building Holvi? So as the founding team, we'd always been entrepreneurs running our own small businesses. Part of the founding team, we'd had a software development boutique. There was one co-founder who had been running as a freelance graphic designer. Then we had also been very active in event organizing, had made some software in that area. And really in all of those activities, we kind of felt that hey, there isn't really any software, any solution that would truly help us in running our businesses. Yes, there were banks. Yes, there were accounting softwares. The accounting softwares really weren't kind of modern, easy to use. They were completely separate from kind of the universe of banking. and no one was really kind of bringing those together into a holistic service where I mean, as we kind of put it, that small business owners are not in the business of business management. They are in the business of being a freelance graphic designer. They're in the business of being a freelance yoga teacher, whatnot. And they should have the type of software, kind of banking services that help them focus on what they're actually doing, what they're actually delivering to their customers. So kind of from there, we also saw kind of the first payment service directive, PSD1, kind of bringing to market the possibility of doing payments as a slightly lighter regulated non-bank entity as a payment institution or e-money institution. So we just really kind of started scratching our own itch that hey, it would actually be possible to build the banking service, the business management service that we really want to have, and that's the journey that we're on, and it's been quite a varied journey, but yeah.
So the point is basically that is actually a very good point. If you're running, let's say, a gym or a yoga studio or a small market, your main focus shouldn't be banking. That should just be a service that you have on one side. So that's a very good point, to be honest. And did you actually started bootstrapping, or you booked investors right after the launch?
Well, I mean, we've funded the company initially from kind of savings from our other business activities, but then quite quickly brought in angels from the Nordics, as well as then got accepted as the first Finnish company to the accelerator seed camp, and then brought in to bring the capital that we needed to get the pan-European license. So the Austrian VC firm Speed Invest joined as the first institutional investor, and they were really kind of back then in 2014 one of the few funds that actually had a kind of dedicated fintech strategy and had actually done like fintech investment. I mean, these days every VC has fintech investments, but it was like super different back then. So yeah,
it's also very interesting. I mean, this part of the focus on this industry, it was basically after 2016, 2017, you know, the huge wave actually started until the peak in 2021. So actually raising money for something like this in 2014, it's kind of not common, you know. So I was the environment and at that point of view, it was actually easy to find someone like them. You know, Speed Invest is a very good investor from them, but I believe it wasn't easy at that time frame.
No, it definitely was more challenging, as there weren't like kind of examples. Like these days, it's very easy. You just say like, look at Revolut; they're doing very well. This neobank business is a viable business model. But back then, there wasn't any of those examples that you could point to, and even like, okay, how do you build a neobank? What does the technology stack look like? What does the regulatory stack look like? What are the partners that you need? It just didn't exist at all to the same extent. It was also hard for investors to understand that. How does this thing really work? Like what are the revenue streams? How is it going to make money? And also like it was very unproven at that time that would customers be comfortable actually having their money sit at a new provider, something that hasn't been around for 100 years. So there was a lot of unproven things, which of course for us led to so we were raising around in 2015, and it wasn't the easiest of fundraisers. And as part of those discussions, we got into quite deep with two potential strategic investors, and in the end, we then decided to partner up with the Spanish banking group BBVA, who acquired us 100% at the beginning of 2016. So as a company, we joined BBVA's. They had at that point a unit called New Digital Businesses, where the point was really to do internal incubation, but also do like acquisitions. They had acquired before us in the US this company Simple, who were really the N26 of US, really a neobanking pioneer before neobanking was a thing. Yeah, so beginning of 2016, we joined BBVA. We were very small at that time. We were like under 20 people, so like, and at really at an early stage of internationalizing the business from Finland to other markets. But then for the next 5 years, we really scaled the business with the help of BBVA, built the market presence, got additional licensing, built a lot of additional product, acquired customers, all of that. So very, very good years, really enabling us to grow in the way that we wanted to grow and with the resources that kind of were available from a corporate parent, but weren't really available yet from kind of the VC capital markets. So, and we grew from also the team from around that 20 people to about 150 people. So really a big transformation of the company with the help of BBVA, and hopefully we also provided some value to the bank in kind of bringing pioneer how to actually open new markets for business banking. In non-core markets of the bank, how to do it fully digitally, how to do it with kind of a little bit lighter regulation. So that was really the kind of our role in the innovation ecosystem of BBVA back in the day.
Yeah, I think that BBVA is one of the more active banks under that point of view. The one that started the soonest, I think. Like for example, in the Spanish market, I think that right now we are seeing, for example, Santander doing something similar with digital banking. But I think that overall in Europe, they were among the first that actually moved in that direction. And to double down on your topic, I think that we still didn't saw the moment where people were actually trusting digital banks more than traditional banking, at least in Europe. So I think that we are in that process right now, but we are still not there. Obviously, it's kind of a totally different environment from 2014, where it was almost impossible to actually make that statement. But I think that we are still very early under that point of view. There are a couple of markets where this is different, like, for example, Latin America is one of them. Southeast Asia is another one. But still in Europe, we are a little bit traditional under that point of view. And what do you think, maybe, let's say, coming from more than 10 years of experience in this market, what do you think is the real evolution in this kind of fintech market right now? What do you saw changing from 2014 to now, for example, in digital banking, of course, but overall in the fintech market?
Yeah, I mean, in terms of like customer trust, I think it's actually quite simple in a way. Like, how has that customer trust have been built? These kinds of things just take time, and when you're talking about like, where do I put my money, then just the fact that if a new entrant to the market has been around for not just like, we founded this company like 2 months ago, but if you've been around for 10 years, that already is this stamp of hey, okay, there is longevity in this business. This is a trustworthy business. What has also helped is that we're starting to see like ourselves profitable neobanks, and that's of course also like, where do I put my money? Do I put it in an entity that kind of constantly has to be replenished with VC money, or like a solid business that is actually generating profits and therefore has this kind of like longevity built in. So I think on one hand is just really time has done its magic, but then also like, is there like any aspect of our lives where we don't kind of use and trust digital services these days? So it's also just this familiarity. Like, if we go back to when we started, like 2011, okay, iPhone had only come like 3 years prior. Did everyone have a smartphone? No. I mean, now everyone's had a smartphone for 10 years. And so
it's kind of different. Yeah,
it definitely is.
Yeah, it's all about timing, basically. So you were doing the right thing just like 10 years in advance, I would say. So
I think maybe a little bit early, which for us then was kind of like very, very good to team up with BBVA. Of course, these days it's different again. So in like fast forward 5 years of being part of BBVA, so 2020, kind of a lot of changes in the world with COVID, etc. Also some changes at BBVA at the new digital businesses unit, and of course the way that like innovation goes, like what was very new, like digital banking 5 years prior, then it had over the following 5 years kind of become much more of a norm. And these things together then gave us an opportunity to put on the table a management buyout, which we which we executed in the beginning of 2021. For 4 years and a bit, we have been a fully team-owned company. So we're about 130 people now, Finland, Germany, Austria as the main markets. And just a team as the owners and a solidly profitable company. So we've been able to also grow the business, grow the product, grow the team from actually just running a solid business.
That's a very peculiar story, that sounds actually quite the opposite of what happens to digital bank. They usually, grow up and they be acquired or they make an IPO, they go exit and everything. You actually did the next step, basically. You came back to get an independent company trying to grow on your own. So that's kind of very, very peculiar, very, very interesting at the same time. You said you did that in 2020, 2021. Where basically we saw the peak of the industry in terms of valuation, in terms of growth and everything. And at the same time, it was one of those periods in time where there was a huge focus on B2C and retail customers. At the same time, you are a B2B company, so you're selling to entrepreneurs and businesses. You went independent in the exact period where the valuation was perfect for you to not be independent. How do you actually, merge those two things at the same time? How that actually went, in real life, in practical things?
Well, I mean, for us, the timing of becoming, like, as we call indie Holvi, independent again, beginning of 21, was actually very good timing. Like if we look at 21, 22, that was really the slump years of kind of all things neobanks, kind of raising money at that point would have been difficult in any case. So for us, the strategy really was that, okay, now when we became independent, we were still quite heavily loss making. So it was very, very important for us to really make the efforts that, okay, let's make this company break even and then on to profitability. And how do we do that? Super tight cost control. Also, we had to reduce the team, so we went from 150 to about 65 people, so quite drastic reduction. We've then grown back to like about 130 people now. But then something that we did quite a bit earlier than many other folks in the industry, that we kind of stopped offering the fully free accounts, and we put a price on all the services that we offer, so that every customer pays a monthly price. That of course improved our unit economics really significantly. Of course, we also did see quite a lot of churn. We did see customers that felt that, okay, we were not living to our promise of, okay, offering free, then putting a price. But then again, when we did the analytics of the customers that were kind of the most price sensitive, who left at that point when we put a modest monthly fee, those customers on average were generating 1.8 euros on a monthly basis. And like even as a digital bank, being very, very effective, very efficient, it's very, very hard to operate a card and an account and other services with under 2 euros per month. So while we were very sad to see some customers leave, for the business as a whole, it was quite a healthy thing to do. We of course saw then over the following like year, 2 years, almost everyone in the industry then moved towards like, okay, let's stop offering a fully free account. Let's actually charge something from customers. Now the pendulum seems to be switching again. We see in markets like, for example, in Germany, where kind of the fully free account is making a comeback, and also the competition for customers is quite fierce. Let's see how that goes, because for sure some of the customer acquisition is not unit economics positive, but just really building market share for the future. Yeah, I mean, but the world doesn't stay still. So
but I think that is part of the shift that we saw in the market. To be honest, we saw strong focus on B2C, then everyone moving back to B2B overall in the startup ecosystem. And the financial services just follow, So we saw many different kind of digital banking startups and companies actually focusing a lot on SMEs. And some of them were coming from both B2C and B2B kind of offering. So I think that it kind of makes sense to reintroduce, for example, from a strategic perspective, the free account. because you can actually acquire customers with the free account, retail customers that can either go on becoming an entrepreneur, a small business, a freelancer or something like that. And they can actually spread the word around to people that are actually the real target of those kind of company, where they will have, of course, a paid account. So I think that under a certain perspective, it makes sense. Obviously, if you have a strategy that is only based on retail with only a free account, sooner or later that is not going to work, because otherwise you're never going to be cash positive. So that's a problem. But I think that the kind of shift that we saw in the last years, it's very, very interesting, coming from consumer to business to free to paid to free again. And at the same time, I also saw traditional banking just not moving under that point of view, So quick example, I still have my old traditional accounts in Italy, and I still get charged the same amount of money. Isn't that kind of strange, given the actual condition of the market?
Yeah, I mean, depends, of course, like whether you look at the business from the point of view that, okay, yes, it's a stable state business where I want to make money on each and every customer, or then you have the model that, hey, I just really want to grow super fast, and some customers might not be that lucrative, but they spread the word, they spread the awareness. And that's always been a challenge with kind of pure play business neobanks versus kind of like more universal banking model, that you do have less of that exposure, less of customers kind of just really being aware of your brand. What has worked very well for us, especially in the Finnish market always, is that we also service nonprofit associations. While those are not super lucrative just on a kind of business perspective individually, where that works really well for us is just really building the awareness of Holvi, making the brand kind of visible to folks, because like every nonprofit association, whether they invoice their members, sell with an online store hosted by Holvi, or other activities, you always have that multiplier effect that every nonprofit association easily comes to contact with tens, if not hundreds of people. And that has always been like very, very strong way for us to get our brand out there and bring that visibility, which we don't otherwise have, as we don't service consumers directly.
No, yeah, that's a really good point. Let's maybe abstract a little bit more. So basically, the main period of this kind of market in the fintech market. I wanted to maybe shift focus a little bit and try to look forward. Where do you see this market going in the upcoming years? Not just for the digital banking, but also taking into consideration everything that is happening, for example, in payments with stablecoin, with AI, and with the geopolitical situation. So how do you see the market evolving, let's suppose, in the next 5 years?
Yeah, I mean, one of the interesting trends is that should we drop the neo from neobanking, and especially is the market of neobanks really bifurcating to kind of two segments, kind of the more non-bank segment, and then just the players who actually operate as traditional credit institutions, just more digital. So maybe that is already to a degree happening. And then also are we over the next 5 years going to see, well, what we call neobank segment or new entrants kind of really becoming a force to be reckoned with against traditional banks? Are traditional banks really starting to actually kind of start to significantly lose not just market share, but also the share of revenues to new entrants? And when we look at kind of B2B neobanking, traditionally also ourselves, we've served the freelancers, the smaller companies, but more and more kind of the services that we're building, the customers that we're attracting, the customers that we're targeting are the bona fide SMEs from 10 to 50 people companies. And over the next 5 years, I'm sure that neobanks will also start to service the kind of genuine mid-sized companies from 50 to 250 employees. And that's where kind of we really then start to see kind of large revenue pools going from traditional banks to neobanks, because of course, numerically, these are not such huge customer pools as a share of revenues of business customers. They're of course where really the larger pools of revenue are, and that's going to be like very, very interesting whether you can then go into those segments with a digital only offering, or do you need to have much more in the way of relationship managers, more in-person meetings, etc. So kind of really becoming much more traditional in a way. But then you mentioned stable coins, also super interesting to see how things are going to develop, not only like in the next 5 years, but in the next 1 to 2 years, because like stablecoin usage in international payments, it really is growing like crazy. Little bit more in the kind of specific corridors, not necessarily kind of payments between Europe and the US, but more.
I don't see it like, for example, to be very useful to, let's suppose, from France to Germany, but we already know that biggest part of the trade in the world is done in US dollar, and they're investing heavily in this infrastructure, in this technology. We saw recently, for example, Bank of America announcing that they were working on their stable coin for international payments, and I think it's one of the most interesting, let's say, areas that is developing right now, mostly because the pain is real and is there. In order to shift money abroad, you need to spend a huge amount of time and a huge amount of money, and this is impacting businesses.
Absolutely, and what's also very interesting, like globally, to see how stable coins are making the access to the whole US dollar, the whole USD banking ecosystem more available globally. That okay, it might be a tricky proposition to whatever country you are to be able to hold a fiat USD account, transact in USD, but with stablecoins, you have this really alternative banking system emerging where you can just, doesn't matter where you are, you can actually get access to the USD financial system, which for in many cases, many use cases, many countries might be more attractive than the domestic currency banking system.
Yeah. It's also very interesting, the first point that you mentioned. So you actually see larger companies coming in the digital banking direction. That is a very good point. Makes a lot of sense, to be honest. At the same time, I was wondering, okay, how should a neobank or a digital bank actually serve those kind of people? Because you made a very good point. So there is need, for example, for a relationship manager or for an account manager, or should digital banks, think about that kind of relationship from a digital perspective only? And I think that this is going to be very interesting because the kind of shift that we saw in the market is actually, in my opinion, preparing that kind of business segment to be covered, but we are not there yet. So I think that there's still time to think on what that kind of relationship should look like. I'm not sure what it's going to be, because it's not that easy. Serving a retail customer is way easier compared to what a large enterprise needs.
Yeah, no, absolutely. And maybe, of course, we're going to see first like specific service like FX is a good example. If you're paying quite a bit as an SME for international payments, currency conversions, or anything related to currencies to your traditional bank, okay, maybe you have financing from your traditional bank. Okay, fine, you can still keep that traditional bank. You can keep your financing with the traditional bank, but that doesn't mean that you can't take a second bank next to your maybe even primary banking relationship, and then you drive your foreign currency volume, for example, through a neobank. You get great savings. It is a product that lends itself to be delivered fully digitally. As a neobank, chip away from the traditional players, product by product, bit by bit. And of course, even for smaller businesses, it really makes hell of a lot of sense to be multi-banked. So you shouldn't think like as a larger business that is already established, they already have banking relationships. I mean, if they're a larger business, of course they already have banking, because like no business starts as a 50% company from day one. It doesn't happen. So kind of for neobanks to attract those customers, you have to go with specific products. You have to bring complementary products, more cost-effective products, or other ways, better products, and not try to kind of like, hey, you got to switch all of your banking to us, because it's just not going to happen. There's just so much friction. You take it product by product, and overall, that's just beneficial for companies as well. I mean, cyber attacks are not going to get any less than they are now. So it's just a really, really good idea to have money at multiple providers. So if your primary bank is hit by a cyber attack, you can still make payroll because you have money elsewhere. I mean, we saw that with Silicon Valley Bank. It wasn't a cyber attack, but single home with Silicon Valley Bank, not a good idea.
Yeah, no, I think that single banking shouldn't be in any corporate at all, to be honest, because it's just a bad idea. Maybe last question from my side. So we've been talking about many different kind of trends from B2B to stablecoin. There's one big one missing, that is obviously AI, and this is one of the questions that I like to ask to every CIO. Basically, are you actually using it right now? How did you actually AI impacted your operation and your workflow internally, if of course it did?
Yeah, I mean, of course, and I didn't mention AI because and we just had our we do twice a year a team week where we bring everyone to Helsinki, and then we got like feedback that, hey, in the management presentations, why was AI not covered? And I was like, yeah, no, we didn't cover AI because we thought that this is already, it's here, it's everywhere. Like we don't need to cover that like separately. That, hey, everyone at the company has access to multiple AI tools. We have compliant AI use policy. Okay, you can just don't do XY dumb things. Don't send corporate data or customer data to random AI. Like, don't do that. But otherwise, just go ahead, use AI. Same in product development. We build a platform internally that kind of we have wide variety of LLMs available that in any kind of new product area, just like whenever you see a use case, whether it is in back office automation, whether it's in automation directly to customers, you can tap into a wide variety of AI services directly, and we just really see it as it's not a special thing anymore. It's just everywhere.
That's a really nice point. I mean, it's kind of becoming the new normal. I mean, I still let's say I don't remember the last time that I asked that question and I received the answer like, no, we are not doing that, or no, we are not evaluating that. So it really became the new normal at that point of view. But yeah, Thomas, it was a really interesting conversation. Thank you very much for joining me today, and I really wish you the best for the upcoming challenges and changes in this environment. Thank you again for joining.
Oh, thanks a lot. It was fun.
Thank you. Bye-bye.
Bye.